Imagine a world without electricity. Complete chaos,
Oh,
right?
absolutely.
No internet, no refrigeration, no hospitals. But now, imagine a world where we generate all this massive power from nuclear plants, wind farms, huge dams, but we have absolutely no way to tame it,
Right.
no way to step it down from a high voltage transmission line to something that won't instantly blow up your laptop charger or fry your toaster.
Hmm.
That is the world Astor Energies prevents. We are talking about the backbone of the grid today, not just the power, but the control of the power. Welcome. I have a massive stack of documents in front of me today. We're looking at the 2025 Consolidated Financial Statements and the Independent Auditor's Report for Astor Energy.
It's a heavy one.
It is dense, it is technical, and it is full of very large numbers in Turkish lira.
Yeah.
Our mission is to decode this. We are going to translate these billions into US dollars so we can understand their real scale. And we're going to figure out if this industrial giant is just humming along or if there is a massive power surge happening that investors need to know about.
It is great to be here. And you were so right to frame it that way. We often get distracted by the sexy side of energy, the solar panels, the EVs,
For sure.
but none of that works without the heavy hardware that moves the energy from point A to point B. That is Astor's playground. And looking at this 2025 report, it is a fascinating case study. I mean, we are looking at a company operating in a hyperinflationary environment, making some incredibly aggressive moves to protect its value.
Aggressive is the word.
It reads less like a standard annual report
Yeah.
and more like a survival manual for a volatile economy.
I love that description. A survival manual. Because when you look at the cash flow, which we will definitely get to, it really feels like a tactical operation.
It does.
But before we get lost in the spreadsheets and the ratios, let's first get to know the company a little. Who are we actually dealing with here?
So Astor Energy isn't a startup. They have been in the game since 1983. They were originally founded under the name Transtech before rebranding. Their headquarters are in Sinkin, Ankara. But when I say headquarters, don't picture a glass office building with a few cubicles. Picture a fortress of manufacturing.
I was looking at the facility specs in the report. They commissioned a factory in 2017 that has 78,000 square meters of closed area.
It's huge.
That is roughly the size of 11 professional soccer fields,
Yeah,
just of indoor machinery.
exactly. And they didn't stop there. In 2020, they opened another mechanical manufacturing factory with another 27,000 square meters. This is the muscle of the company. They make the heavy transformers, distribution transformers, power transformers, and the high voltage switching products that keep the grid from, melting down.
And it's not just in Turkey, right? I saw they have a presence abroad.
Yeah, their arteries reach pretty far. They have branches in Baghdad, Iraq, and Zaragoza, Spain.
And I noticed a strategic shift in the subsidiaries list. They recently acquired something called Astor RO Energy in Romania. What's that about?
That is a critical detail. Up until now, Astor has mostly been the one selling the shovels during the gold rush building, the hardware. Buying the Romania entity, which holds the solar power generation license, means they are starting to dig for gold themselves. They are moving from just equipment manufacturing into actual energy generation. It is a diversification play.
Ah, okay. So they are making the gear, and now they are starting to make the juice, too.
You got it.
Conversely, I saw they sold off a subsidiary called Acer in December 2025.
Right, so they are trimming the fat in one area and adding muscle and renewables abroad. It shows they are actively curating their portfolio, not just sitting still.
Now, looking at the people behind the power, who actually owns this beast?
It is still very much a family-anchored ship. Ferhat Güngör is the majority shareholder with 57%.
Okay.
However, the public float, the shares that you or I could buy on Borsa Istanbul, has ticked up significantly. It is now at 37%, up from 28% the previous year.
So the public is taking a larger bite of the apple.
A much larger bite.
And the team is growing to support that. They ended the year with 2,478 employees. That is up from about 2,100 the year before.
Solid growth.
That is a solid headcount expansion. But I have to ask, because we always check for the learner, are the executives looting the treasury? What is the compensation looking like?
I looked at that specifically. The top management, the board, and key executives receive total benefits and wages of 44.5 million TL. Now, for our international listeners, if we use the exchange rate from the report date, which is roughly 42.85 liras to the US dollar,
That comes out to
just over 1.04 million US dollars.
like $4 million total.
split among the entire top brass.
For a company with nearly $1 billion in revenue, that is surprisingly modest.
It is very reasonable. It suggests they aren't bleeding the company dry on executive comp. It aligns with that family business ethos where, reinvestment often comes first.
Okay, so we have a massive manufacturer, growing globally, family-controlled but increasingly public. Let's look at the battlefield. What is the vibe in the sector right now?
The sector is hot, but it is tricky. The demand is undeniable. The whole world is electrifying.
Data centers, AI.
Data centers, AI, grid modernization, they all need transformers. That is the tailwind. But the headwind is volatility. In Turkey specifically, you have the currency fluctuation and inflation.
So if we were to do a quick SWOT analysis, strengths, weaknesses, opportunities, threats, what stands out to you?
For strengths, it is that sheer capacity we mentioned. Over 100,000 square meters of production space. You cannot just spin that up overnight.
No way.
Plus, they have a government-certified R&D center. And they are profitable despite inflation, which is a huge strength.
And the weaknesses. What's the Achilles heel?
I would point to the trade receivables. We will dig deep into this in a minute, but a huge chunk of their assets, 33%, is just money people owe them.
Wow.
That is a lot of cash tied up in invoices.
That feels like a massive pile of IOUs. What about opportunities?
The Romania solar expansion is the big one. It opens up revenue in euros, likely, or hard currency energy markets, which hedges them against the lira, and exports in general. Their foreign currency assets are high.
And the threats, I assume inflation is number one.
Hyperinflation, absolutely. The report explicitly states Turkey is treated as a hyperinflationary economy. That erodes the value of money if you just let it sit there. And there's a legal risk, too. They have a provision set aside for a competition authority fine.
We will definitely unpack that fine. All right, now we can move on to our analysis. Let's crack open the financials.
Just a quick warning for the listener before we dive in. All the figures we are about to discuss are inflation-adjusted according to TA's 29 standards.
Okay, explain that like I'm 5. What is TS 29 and why should I care?
Imagine you made $100 in January, and by December, because of inflation, that $100 only buys a candy bar.
Right.
If you just report, I made $100, you are technically telling the truth, but you are lying about the value. TSS 29 adjusts all the historical numbers into December 31st, 2025 purchasing power. So when we compare 2025 to 2024, we are comparing real value, stripping out the noise of inflation.
Got it. So we are comparing apples to apples, not apples to raisins. Let's start with the top line. Revenue.
Revenue came in at 35.3 billion TL. At our exchange rate of 42.85, that is approximately 823.7 million US dollars.
Nearly $1 billion. And how does that compare to the year before?
It is a slight increase. The previous year was 34.8 billion TL. So we aren't seeing explosive rocket ship sales growth. It is steady.
Okay.
But the composition is what matters. Domestic sales were about 21.5 billion TL, while export sales were roughly 14.1 billion TL.
That is a significant chunk coming from abroad. Almost 40% is export. That acts as a serious safety net if the local Turkish economy slows down.
Exactly. It diversifies their risk. Now, moving down to gross profit, they brought in 13.0 billion TL, or about 304 million US dollars. Their margins are holding up well.
Impressive.
In fact, if you look at the cost of sales, it was 22.2 billion TL. In real terms, their cost of sales actually went down slightly compared to the previous year.
That is really impressive. In a high inflation environment, usually costs spiral out of control. It seems like they are managing their factory efficiency very well.
They are, and that efficiency drops right to the bottom line. Net profit for the period was 7.67 billion TL. That is roughly 179 million US dollars.
And that is up from the previous year.
Yes, up from 6.58 billion TL. So despite the inflation chaos, despite the economic headwinds, they actually grew their real profit by over 1 billion lira.
That is the headline right there. Real growth in a tough market.
It is. Earnings per share, or EPS, came in at 7.68 TL, or about 18 cents USD per share. It shows a resilient business model.
Okay, but here's where it gets really interesting for me. I was looking at the balance sheet, specifically the cash position. In 2024, they had over 6 billion TL in cash. In 2025, it dropped to 1.28 billion TL.
Okay.
That is about $30 million.
That's right. It's a huge drop.
If I saw that without context, I'd panic. Where did 80% of their cash go? Did they lose it?
No, they didn't lose it. They deployed it. This is the aha moment of the report.
Okay.
If you look one line down, you see financial investments.
Yeah.
That number jumped from 4.2 billion TL to 11.3 billion TL. That is about 263 million US dollars.
Whoa, okay. Let's unpack this. Why drain the checking account to fill the investment account?
Because cash is a melting ice cube in a hyperinflationary environment. If you hold lira in a standard checking account, it loses purchasing power every single day.
Every day.
The CFO at Astor knows this, so they took that liquidity and moved it into short-term financial investments, funds, bonds, likely instruments that yield return higher than inflation or are linked to foreign currencies.
That is smart. It is like financial self-defense. They didn't spend the savings. They just moved it from a checking account to a brokerage account to stop it from melting.
Precisely.
Yeah.
And they did something else defensive. Look at the inventory.
The pantry. It doubled. It went from 3.7 billion TL to 7.8 billion TL. That is like $182 million worth of raw materials and transformers sitting there.
Again, this is a classic inflation strategy. If you know copper, steel, and oil are going to be 50% more expensive next year, what do?
You buy them now.
You buy them today. Holding physical goods transformers, copper wire is often better than holding cash. They are stocking up to lock in their costs.
So they are cash poor, but asset rich. They have investments and a warehouse full of copper. But let's go back to that weakness you mentioned earlier, the trade receivables.
Yes, this is the risk factor. They have 11.8 billion TL in trade receivables.
Which is how much in dollars?
That is about 274 million US dollars.
Wait, let me do the math. $274 million. That represents money customers owe them but haven't paid yet.
Correct. And to give you context, that is 33% of their total assets. 1/3 of the company's value is basically IOUS.
That's a huge number.
The independent auditor, Grant Thornton, actually flagged this as a key audit matter.
Why? Is there a risk they won't get paid?
In a tight economy, everyone pays slowly. The auditor has to spend a lot of time verifying that these customers actually exist and have the ability to pay. If a major customer defaults, that asset disappears. It is something investors need to watch closely.
Liquidity is great, but only if you can collect it. Let's talk about the other side of the coin. What do they owe? Their debt.
This is a very bright spot. Their short-term borrowings are about 4.5 billion TL, or under $5 million. But their long-term borrowings,
What are they?
zero.
Zero.
They have no long-term bank
loans. They paid them off. They had about 50 million TL long-term the year before, and now it is gone. Think about that. They have 11.3 billion in financial investments and only 4.6 billion in total financial debt.
So they're net cash positive.
By a huge margin.
That is incredibly healthy. Most heavy industrial companies are drowning in leverage right now to pay for their factories.
It gives them agility. If they want to build another factory or buy another solar plant, they have the firepower to do it without begging a bank for a loan at 50% interest rates.
Speaking of building factories, are they actually spending money on operations?
They are. They have a line item for construction in progress that saw about 3.1 billion TL in additions.
Okay.
This suggests they're actively building new production lines or maybe infrastructure for those solar projects. They aren't sitting still. Now, I saw a scary number in the report called net monetary position loss. The report lists a loss of 8.0 billion TL. That sounds terrifying. Did they lose 8 billion lira?
This is a tricky accounting concept under TAS 29. It is not cash leaving the bank.
Okay.
It represents the loss of purchasing power of their net monetary assets.
Mm.
Because they hold assets in lira and inflation was high, the real value of those assets dropped compared to goods and services. It is paper loss, but it highlights the pain of the economic environment they're operating in.
So it's the invisible tax of inflation made visible on the spreadsheet.
That's a perfect way to put it.
Okay, so they didn't write a check for 8 billion, but their wallet got lighter in real terms. Now, there is one expense that definitely isn't invisible. The fine.
Right. They have set aside a provision of 239 million TL, about $5.6 million, for a competition authority fine.
Ouch. What is that about?
The report says they are fighting it in court, but accounting rules are conservative. If there is a likely fine, you have to set the money aside now, just in case. It puts a dent in the profit. But considering they made over $7 billion in net profit, it is a sting, not a fatal blow.
So if we look at the financial ratios to wrap up this section,
Yeah.
how healthy are they really?
The current ratio, which measures their ability to pay short-term bills, is roughly 2-to-1. They have 35.8 billion in current assets against 17.3 billion in short-term liabilities.
Very healthy.
Very healthy liquidity. They can pay their bills twice over. And their debt to equity is very low. They are funding their growth with their own money, not borrowed money.
And shareholders' equity, the owner's piece of the pie.
It increased to 33.3 billion TL, or about $777 million. In real terms, the company is getting richer, the equity holder's slice of the pie is growing.
So putting this all together, we have a company that makes the hardware essential for modern civilization. They are debt-free in the long run. They are sitting on a mountain of investments and inventory,
Right.
but they are owed a lot of money by customers.
That is the summary. Astor Energy is acting defensively against inflation, stocking the pantry with copper, hiding the cash in investment funds, while acting aggressively in expansion with new factories and the Romania deal.
It feels like they are building a fortress.
A fortress that exports. Remember that export number is key. If the local economy wobbles, selling transformers to Europe or the Middle East keeps the cash flow stable.
So what is the verdict for the learner listening to this? Is this a company that is surviving or thriving?
It is a solid company. It is profitable, growing, and well-managed financially. But you have to be comfortable with the macro risks of Turkey, the inflation, the currency fluctuation, and that high level of trade receivables.
Right.
If the economy crashes hard, collecting those debts becomes a problem. But looking at this report, management seems to be pulling the right levers to navigate the storm.
They're controlling the variables they can control.
Precisely. And in this market, that is all you can ask for.
Before we sign off, a quick reminder to you listening. If you enjoyed this deep dive into the numbers and want us to keep demystifying these balance sheets, please hit that like button, subscribe to the channel, and share this with your investor friends.
And if you want to support us in making more of these videos, consider evaluating the channel membership or using the Super Thanks feature. It really helps us keep the lights on, pun intended.
So here is a final thought to leave you with. Astor has doubled its inventory and moved its cash into investment funds to fight inflation. In a world where currency loses value every day, is a company's smartest product the transformers they sell or the financial engineering they use to protect their profits?
That is something to think about.
Thanks for listening.
Goodbye.